Howdy, Jacob here. Today we're looking at Delek Logistics Partners Company, ticker symbol DKL. Started looking at some of the numbers here. So first thing I see, a lot of net debt, 2.2 billion market cap with a 3.9 enterprise value. Uh, Pretty fair PE, 14.9, but price to book negative. Like I said, initially looking like a lot of debt on hand. It's in the oil, gas, consumable, and fuels. Seems to be a lot of companies that pay out dividends. They are pretty commonly in this arena of for this industry. So first thing I see is 1.6 billion dollars in debt, long-term debt. That's a lot. That is a lot. So they jumped very heavily between 2021 and 2022. Let's see if that was acquisition wise, and it was 626 million for an acquisition. Looks like they used debt to pay for that, issued a lot of debt. But yeah, they're paying out 170 million, 7.9% yield. So I mean they could cut that in half, and it, what is that, 88.5. I mean they could afford, it'd be a huge payout, but I think they could afford half. They might have some good years, might have some bad, but with that, here's the thing I'm worried about. So they had an acquisition, and since that acquisition, their capital expenditures have shot up. Pre-acquisition, highest capital expenditure was 26 million, and they have 141 and 122 million in capital expenditures since the acquisition. So this might be something I either would need to look into the company's 10K, look at the history of the company they acquired, see if that really makes sense or not. But yeah, I really don't like the debt on this company. It looks like they've just been issuing debt to help fund the dividend and whatnot, and then one little payback here, and then another acquisition comes, and bam, huge amount of issuance of debt. So pretty unattracted by the issuance of debt. Going to have to need a big margin of safety here. So I'm just immediately going to have to put in 17.5%, a bump on the 15 that we usually do just because a lot of debt. So let's get into some assumptions here. So due to an acquisition, that looks like the reason for their jump in revenue. That's fine. I mean, are they pretty commonly buying back companies? Yeah. I mean, usually not as big of acquisitions, but they're pretty good at buying back companies, or buying companies. So I'm not saying they're good at buying companies. They have a history of buying companies. So um, definitely going to keep that in mind. I might just do 3%. Say they organically don't really grow, but inorganically buy some companies, and then it's weird. They look like they have a huge return on invested capital here, but I mean, it's just a company that has so much debt. I'll go whatever. I'll go the classic 313. Kind of wanted to bump it down, but that's fine. And then as for margins are always tough with acquisitions, but if we just go a little bit below average here, let's say 16, 18, because what was it, 18 and 20? Yeah, I'm good with that. Share change. I mean, it looks like they didn't issue shares to. They didn't really issue shares to make the acquisition. It looks like a little bit, but nothing too crazy. So I just say zero. Like these must have been some crazy years, but yeah, it doesn't look like they've historically had much in stock-based compensation. Um, I might just do one for. Whoa, not that one. 1% for stock-based compensation, but doesn't look like they're buying back any shares. And then for the dividend, I said let's cut it in half, keep that paying out roughly 85 between 85 and 90 million. I think that's pretty reasonable. This 177 is absolutely not reasonable, especially since the acquisition. But even before, like we're not there. So cut that in half. Maybe they can pay for it. But again, these capital expenditures are massive. I'm a little skeptical about it. So yeah, I mean I want to bump a lot of these numbers down a little bit, but for now, before I even do any review, let's say it needs to drop 45% before, I need to really consider it, look more into it. But I mean, there's just a lot of things I don't like about it. So if I were to do an in depth, I definitely have the things that I want to look into, see if they make sense, and if not, if some of the numbers can't make sense, then it's just a company I'm not going to buy. There's so many companies out there. I'm not going to beg to buy a company that I don't fully understand and I won't understand. So I hope that's the lesson for people. Hope everyone enjoyed it. Have a good rest of your day.